roughly. So most important, as you can see,
Hi, morning everyone. Just to do a mic test, if you can hear me and see something on screen, please type something in the chat. Okay, thanks. We'll start the webinar for today. So for this morning, we'll share the results for Dasin Retail Trust, Banyan Tree Holdings, China Aviation Oil, Golden Energy and Resources. And we'll also share on our site visit note for Nico Steel and updates for US, China, and Singapore. So for Dasin Retail Trust, they released their full year 2018 results. Overall, the revenue and NPI were in line with our estimates, save for some loss of revenue from the AEI from one of their malls, Sialam Metro Mall. The positive from this set of results is that they managed to report healthy reversions. It's 8.2% on a portfolio basis, despite the AEIs that were ongoing at two of their malls, Shiji Metro Mall and Sialam Metro Mall. These two are the highest contributing malls by gross rental income. And these two AIs were completed as at the end of December 2018, and the full fitting out of all the new tenants is expected to complete by first half of this year. In addition to that, prior to the results, they had released an announcement that their initial first tranche of offshore debt had been extended by 2 years. So that will be to January 2021 at a lower interest margin. So they had some savings of about 70 basis points. So for this year, only less than 1% of their total debt is due. And the negatives is that they had recorded slower than expected growth at their growth malls. So just to recap, they have 4 malls in total: Shiji Metro Mall, Ocean Metro Mall, Sialam Metro Mall, and Dasin E-Color. So for Ocean Metro Mall and Dasin E-Color, these 2 malls are considered the growth malls. They are in the early stages of the gestation period. So the FY18 NPI for these 2 malls alone fell in excess of 4%. And notwithstanding the effect of the rental straightlining accounting effect, the bigger contributors to this dip stem from the loss of event space at Ocean Metro in the third quarter, as well as expenses incurred for the car park renovation and higher operating expenses for Dasin E-Color. However, we note that there had been some rental reconfiguration for the tenant lease structure. So right now for Ocean Metro Mall, there's a higher proportion of leases on fixed plus built-in escalation as opposed to solely fixed rent. So there's already an inbuilt upside built into for this mall. And given that this is the newest and fastest growing mall in the portfolio, there's further platform for growth. And outlook-wise, the AIs done at the Shiji and Sialam Metro malls that I mentioned earlier will bring in renowned names such as Hai Di Lao. And from there, we'll see favorable renewal and rental escalation going forward. In terms of acquisition for the full year of 2018, there were no acquisitions, but going forward, we expect to see the newly open malls as opposed to those malls that had already been open for a while to be among the immediate acquisitions, as those would provide Dasin the runway for growth. Right now they have 20 ROFO malls across the Greater Bay Area, so that's across Zhongshan, Zhuhai, Foshan, and Macau. And as you know, there had been a blueprint that was released recently in February for this Greater Bay Area Master Plan. So we expect this blueprint to further entrench the positioning for all of Dasin's existing and pipeline malls. The most immediate macro catalyst for them would be the Shenzhen-Zhongshan corridor. So this is a direct highway between Shenzhen and Zhongshan and is expected to complete in 2024, which would reduce the traveling time between these two regions by about 30 minutes. Just to note, for Dasin Retail Trust, this is under our StockFacts paid research program. And we maintain our accumulate call with a target price of 94 cents. Moving on to Banyan Tree Holdings. So excluding surge in effective tax, which was due to higher withholding tax and certain under-provision of taxes in prior years, overall PATMI as well as revenue was in line with our previous estimates. So if you're not familiar with Banyan Tree Holdings, just to give a quick overview of how they report their revenue basically in three segments: the hotel investments, property sales, and fee-based segment. The hotel investments makes up the bulk of the revenue, about 60%, and between property sales and fee-based income, it's about 20% each. For the latter two segments, it kind of oscillates between the quarters. So the positives from this set of results is there was a recovery in the bulk of the fee-based segment revenue. So for the fee-based segment, there are three subcomponents. These are the hotel management, the spa gallery operations, as well as design income. So the former two enjoyed positive growth in the fourth quarter after registering close to 20% declines in the same period a year ago. And this is evident of the group's efforts to transition to an increasingly asset-light model, which is building its momentum. And operating profit for this segment alone had recorded a close to 86% increase year on year. For property sales, that had also been a very sizable uptake. So revenue for this segment alone recorded year-on-year increases of 61% and 50% for 4Q and FY18 respectively. And the jump was largely attributable to the higher handover of units in their Phuket development. So operating profit for this segment was close to double of that in FY17. The negatives is that their hotel investments segment continued to take a hit from the Thailand underperformance and the Seychelles deconsolidation effect. So for Thailand, it's mostly due to lower inventory due to ongoing renovations at their Banyan Tree Phuket and underperformance from the Angsana Laguna due to absence of the previous one-off major events. For Seychelles, there's this deconsolidation effect. What happened was they divested their entire assets portfolio as at November 2018. However, they continue to operate these on a management contract. In addition to that, RevPAR for all hotels under the group, meaning owned and those that they have ownership interest in, was down 17% year on year on both lower occupancy as well as lower average room rates. Another negative is that there had been a decline in forward bookings. This was largely dragged down by Thailand, which is the largest contributor to the group. So forward bookings for all hotels were flat in 4Q18 and subsequently dropped 10% year on year in 1Q19. And for Thailand, the main reason was still the negative impact from the tragic Phuket book accident in July 2018. So during the accident, there was a death toll of about 40 Chinese tourists, and bearing in mind that the Chinese tourists makes up more than 40% of the group's customer base. So they continue to reel from the negative impact from this accident. However, we foresee this to just be a transitional effect for the next 1 to 2 quarters. So going forward, the key catalyst for this group is really the management agreements. So if you had been following, they had signed a management agreement with both Accor and Vanke, and you can see that to the 28 contracts under HMA, this is hotel management agreement. Most of these are with Vanke, and MOU, they have 41 hotels. So once they confirm that MOU, this would be under HMA. And 53 hotels are slated to open through 2019 to 2022. So this 28 new management contracts is actually a record number. As you can see, previously for FY16 and FY17, these were just under 10, about 6 in FY16, and FY17 there were only 3. So going forward, the securing of such management contracts, especially with strong partners such as Accor and Vanke, which are market leaders in their own right, will be the main driver for their fee-based income segment. So overall, we maintain and accumulate with a target price of 76 cents. Moving on to China Aviation Oil.
Hi, next is China Aviation Oil 4Q results update. So we maintain our buy call with a lower target price of $1.67. So the positives in 4Q are that the supply and trading margins improved by 34.5% year on year. The measure is of gross profit divided by the tonnage that they supply and trade. Because the management started to cut on non-profitable trading businesses, which bulk of it is from paper trading business. So that is the main reason why they improved the supply and trading margins. However, the negatives are the total trading volumes and supply and trading volumes decreased moderately. You can see the year-on-year percentage drop. So the reduction of the trading volume was mainly due to the decrease in paper trading business because the management believe that the uncertainties resulted from the geopolitical risk has been escalating. So they started to reduce this paper trading. Another negative is that the 4Q profit contribution from Pudong dropped by 13% year on year, mainly due to the lower refueling volumes, FX losses, and the higher operating expenses. So the outlook for CAO this year is that they will continue, the management will refocus back on the bottom line growth, instead of the volume growth, because last year CAO management was changed. So right now the new management, they will focus more on the profitability rather than the diversification of the product mix. So we expect the CAO's performance to remain flat this year. So next is Golden Energy and Resources. So we maintain our buy call with a lower target price of 30 cents. The positives was that the total production volume exceeded their FY18 production target, which they stated at the beginning of last year. So the actual full year result was that they produced 22.6 million tons of coal, So this is the breakdown of the businesses. However, the negatives are that the coal prices continue to drop in 4Q. So the decline in prices was mainly due to the China's restriction on import coals. Until now, the restriction still remained. Another negative is that the full-year cash cost jumped substantially by 18.6%. This was mainly due to multiple factors, and one of them was the increase in stripping ratio of BIB mine. So from 4.2 last year to sorry, this is the typo, from 4.2 in FY17 to 4.8 in FY18. Please bear in mind that the average life of mine stripping ratio of BIB mine is 4.1. So we expect that this year the stripping ratio of this mine will decrease back to this average. So the outlook for golden is for gear is that we expect it will continue to ramp up the production to 25 million tons. This is stated in their mine plans. And also we expect the average cost will revert back to around $25 per ton, down by 8.8% year on year. In terms of the price outlook, we maintain our forecast at $40 per ton. This was mainly due to the expectation that the China's authority will relax the import restriction because as of now we do see the port coal inventory decline. So we believe that in the foreseeable future they need to replenish the port coal. So next I will pass on to Paul.
Okay, thanks, Conchit. This is Paul here. This is just an update on our visit to Nico Steel's plant in two plants in Suzhou. Yeah, okay. Anyway, just to recap, what Nico Steel does is they will provide the raw materials to electronic manufacturers or metal stampers to produce certain key parts. So, for instance, like you see, this is part of a LED panel in a 13-inch maybe notebook monitor. They're not the ones to create these holes. They're the ones to provide the material for these parts. And likewise for the other two. So they, at any point in time, they've got 20 key projects. But these are the three most material ones at this present time. As you can see, the first project is a LED panel. So this is the part that holds the monitor. And the key thing for them is that this is a customized material. So customized in the sense that this is a material that has been approved. So it's an aluminum and magnesium alloy. And this is a material that's been approved by this Korean LED maker. So you can only buy, there are only one or two suppliers of this particular material or alloy. So the next project, they are looking to get a few more customers from maybe the one or two of the largest LED makers in the world. The next project is a thermal fin. So this is actually in a laptop. What this does is that it will collect all collect all the heat from all the components in the PCB inside a computer, and it will transmit here. And there's as you know, most computers have a fan, and it will just blow to disperse the heat. So the key thing for this is that they're right now working for a branded branded Chinese PC manufacturer, and right now they're looking to work with one of the large US PC notebook makers. So the other part is the RF shield. So this is inside a tablet PC. This is being used for a US manufacturer. And you can see these are the black components, and these are RF in the sense that they will cover these components. Let's say your Wi-Fi or your Wi-Fi or even Bluetooth, which emits a radio frequency. These are the shields, and also it will disperse some of the heat away. So from our meeting, from our visit, some of the competitive advantage for them is that the ability for them to get some of these new projects is because these are customized. So these are unique materials. And to get these unique materials, you need to work with the mills. And secondly, even though you've got these materials, the next competitive advantage you need is that you must have direct relationship with these brand owners. These are some of the largest makers of phones or in the US, or even from some of your laptop PCs. So once you get them, then once they approve you, then that's how you get. Then the metal stamping companies will purchase you, and because they have to purchase you since you already are qualified. And separately, their factories are also quite near some residential developments, and so it's quite a valuable piece of property. And also, they've been there since 2003, so you can see the value of that in Suzhou. So these are not the only products in the pipeline. They've also have other products like heat pipe connectors and so forth. But the ones that you see, the three here, are some of the more material ones. Okay, thanks. I'll move on to Edmund.
Hi, so I'll talk about US macro last week. So most of the indicators seems to be trending downwards. So the new home sales was up 3.7% month over month, but it was actually down 2.4% year over year. As for the US trade deficit, it rose to 891 billion in 2018, which is the highest number ever recorded. The trade deficit includes between US and China reached a 10-year high of 419 billion, despite the fact that there's an ongoing trade war. And the initial jobless claims for last week fell to 233,000. Unemployment rate was down from 4% to 3.8%, while non-farm payrolls in February was disappointing. It only increased by 20,000 instead of the consensus of 180,000. As for the ISM non-manufacturing PMI, it was up 3 points to 59.7, which is more than the estimate of 57.3. For the corporate news, Costco reported its reported earnings, and its EPS beat the consensus, and it was 2.01. However, it missed the revenue expectations. But subscription renewals in the US and Canada were up 90.7% in the quarter, and adjusted e-commerce sales grew 25.5%. So this shows that warehouse retail still has a part to play, despite ongoing competition from online and Amazon. So for the week ahead, some of the key indicators to be released will be the retail sales, core inflation rate, durable good orders, and the University of Michigan's consumer sentiment. So these are the upcoming earnings release for this month. Some of the more notable ones will be Adobe and Nike. Yeah, now I'll pass on my time to Jie Yan.
Thanks, Edmund. For China last week, the headlines of the fiscal policies is on the two sessions in the meetings. Chinese government announced they will cut the rate of the value-added tax for manufacturing industries from the 6% to 30%. For the property tax, the two sessions meetings today, they say the progress is as scheduled, and most of the analysts' perspective it will affected from the 2020s. For economic indicators, we noticed that the Chinese February's new yuan loans and the M2 numbers are less than expected, may be a negative impact for the stock market. For the stock recommendations, our Hong Kong research teams recommend the travel skis technology, give the recommendations accumulate and target price to 27.18. For this week, we are waiting for the new home price new home price. This is the list of all Hong Kong research teams stock recommendations, and we added the travel skis technology. I will pass to Paul for the Singapore Weekly.
Yeah, okay. This is just the last part. We will conclude after this. Just in terms of our short-term views, again, in terms of the macro situation, it's still very, very soft. I mean, just to give you a flavor, as you can see, these are some of the activity indicators around the world. From Europe, you can see it's slowing down. Likewise for Singapore. In terms of the new orders, the PMI exports out of Taiwan is also slowing, and also the ISM new orders out of the US is also contracting. So that's one of the reasons why, like we said earlier, we think there could be a short-term pause in the market. The main of the reasons is that the rally so far has not been supported by economic data, but just a lot of large discounting by the market. Because of the trade negotiations, of course, the Fed. But again, we think that after this pause, we think that the economy can recover. Likewise, we think that the rally in equities market can recover. One thing is because the downturn is really quite protracted. You can see from this, the European PMI has already been contracting since early of last year. And also, there'll be a patient Fed, or at least there's no monetary tightening or no issues on the monetary situation will be, or financial conditions will be still loose until the economy recovers. I think we get that not only from the US and of course from the ECB. That also, as you all know, in the news they came out that they are guiding for lower GDP, and also they are also slowing down in terms of their any decision they make on interest rate hikes. Just one last point in the US, although the payroll numbers were weak, actually the average hourly earnings out of the US, or the wage growth out of the US, is actually one of the highest in more than a decade. Almost 10 years, never have this type of acceleration in wage growth. So the US numbers are still pretty strong, unlike the other countries. In terms of the weeks ahead, I think the key one will be, apart from these normal ones, I think the US CPI is probably one very important macro data point. Because the reason why the market is rally is, as you know, that is because the Federal Reserve has said that they're going to pause in terms of raising interest rates. But if the US CPI or the core CPI starts to perk up and start to accelerate, that will have issues for the whole market if that happens. But right now it's still quite sluggish. The other thing to watch is also this, it may happen. There's no decision, but the deadline is 18 May. That could also be a worry for the global equity markets. As you know, US has to make some decision on their auto tariffs from Europe. Any news on that would actually be quite bad for global markets, because it will probably hit the German economy the most. So that's another so-called flashpoint for global markets. Okay, that's it. And of course, you got the Mueller investigations. Okay, that's it for us. If any questions, yeah, thanks. Okay, we have a question from our favorite analyst, but anyway, we have a question on Nico Steel. What is the current standing on the order book? They don't really give an order book, but I think in terms of expected revenue, this is not a guidance or a forecast. This is a guess. Okay, every project probably can give you maybe 5 million revenue. This is just a guess. Our back of an envelope guess. Okay, the expected revenue from new product lines. Oh yeah, I think that's you can use every project unless they get 1 mega one, and you can just use a 5 million kind of baseline. Our guess. Yeah. Thanks. What will happen to the Brexit vote tomorrow? This is another second guess, probably worse than the guess. Probably going to be an extension. They're probably going to extend the Article 50, and you know the deadline is 31st. No way they're going to hit the deadline. So the most likely scenario is an extension of the Article 50. Again, this is probably worse than the guess of answer. Yeah, thanks.
Hi, there's a question saying M1 will be delisted from SGX on 18 March. This implies that the dividend, XD, and payout date originally scheduled in May is considered as void. Yes, shareholders will not be getting the dividend in the future. And what will happen to those shareholders who did nothing, meanwhile continue to hold shares beyond 18 March? So these shareholders will become minority shareholders in the private company.
Okay, we got one question on Nico. Just to check, do you know the possible competitor to Nico Steel? There is one competitor which, if you look at this product, is the AL50. One notable competitor for them is from Sumitomo Steel. I'm not sure the exact name, but I forgot. But sorry, it's Sumitomo. So one of the competitor to this product, AL50, the GM55. I mean, they call it the GM55. Not that anybody will actually realize what is the. But anyway, the industry name is GM55 is made by Sumitomo. So that is the one of the competitors. Yeah, thank you for the question. Yeah.
Hi, there's another question about M1 delisting. What's your take if M1 shares are delisted, but will it get listed in the future? I mean, if they get a better valuation, I'm sure they will. Listing is another option. But the takeover price is fully valued, in our opinion.
Hi, there's a question on what are the chances of Nike gapping up in their share price after the earning result announcement. Because we don't currently cover Nike, so we may not be able to answer the question. But so far, they have increasing expenses, and it is very likely for them that it is probable for them to meet their revenue expectations. Yeah, so far, for the consumer sector, it is currently going strong, and we can show. And you can see that yes, actually beat its EPS and revenue expectations for the past quarter. Its consensus price is currently $89. So there's another question on whether the S&P is going to continue its decline over the next few weeks. So a lot of good news is already being built into the market already, such as the Fed being very dovish on their interest rate hikes and the issue about the trade war. So it is likely that you'll lose momentum over the next few weeks because no news is usually counted as bad news. So it is likely that the S&P may decline for the next, at least in the short run.
Correction.
There's one question on Nico Steel. What's the last known production tonnage per month and utilization rate? Sorry for that. They don't disclose that to investors. Thank you.
Hi, there is a question asking about whether China aviation oil to achieve the target price of $1.67 from the current price of $1.28. So we'll stick to the fundamentals, which this year the catalyst is that the satellite hub will be built and commence operations this year. And actually the fifth runway has already commenced operation last year. So right now the capacity to handle the aircrafts in Shanghai Pudong actually increased substantially. Just the issues of safety measures, which caused the rate of landing a bit low. So in the future, we do believe that the air traffic in Shanghai Pudong International Airport will continue to grow. So that means in terms of the bottom line, we do see that the main driver, which is the profit from Shanghai Pudong, still have room to grow. So we believe that CAO still have the upside potential. Thanks.
Okay, we got this comment question. Any comments on recent IPOs with price collapse upon listing? The offer price too high by valuation, or is it just market sentiment? I know there've been 3 listings so far this year. So sorry, we don't really have the exact details of each of these, but I guess some of these they're only raising 4 to 5 million, and your IPO expenses is almost $1 million. So in the near term, when you're raising too small or your profits are too small, in general, you're going to get quite hit by your earnings in the very near term. Sorry, just a very broad statement. We can't really say much on. Sorry, we can't really help you much on this because we don't have the exact details of all these IPOs. But just in general, when the IPO is too small and they're raising too little money, some of these IPO expenses could actually be quite harmful to the earnings. And especially when you go for listing, there are also other expenses, director fees and continuous listing fees. So if your earnings are too small, it could be very, very dilutive when your earnings base is just too low. Yeah, this is just a general comment. Thanks. There are no other questions. Thanks everyone for attending and take care. Bye.